actually need to talk about cricket for a second. Yeah, cricket. Specifically, what happens when you're completely outmatched and you don't even know it.
Just picture it. You're standing there, and Jasprit Bumrah is about to bowl a 150-kilometer-per-hour scorcher. And what's in your hands? A plastic toy bat. It's not just a mismatch, right? It's a complete disaster waiting to happen. Well, what if I told you that this exact same scenario plays out every single day? Not on a cricket pitch, but in the stock market. And there it is. The cricket pitch is the derivatives market, and that plastic bat, well, that's the set of tools most retail traders are bringing to the fight. Every single day, thousands of people are stepping up to the plate, totally unprepared for the professional level game they've just walked into. So let's call this exactly what it is: the plastic bat problem. It's this whole issue of being fundamentally under-equipped, totally outmatched. Basically, you're set up to lose the game before you've even made your first move.
Because here's who's on the other side of the field. You're not just up against other individual traders. You're facing massive institutions, the real pros. These guys have the best tech, mountains of data, and entire teams of experts who live and breathe this stuff. They've absolutely mastered the game. It's David versus Goliath, but David showed up without his slingshot.
So what's the real-world result of this epic mismatch?
Well, the numbers are pretty staggering, and they point to a huge misunderstanding about why so many people fail at this. 94%. According to the source material, that's the percentage of retail traders who lose money. Just let that sink in. For every 10 people who give it a shot, more than 9 of them fail. But the most important question isn't that they fail, it's why they fail. And here is the absolute key insight. This failure has nothing to do with how smart you are. You could be a genius and still lose your shirt in the market. The problem isn't intelligence, it's a lack of training. It's about being trained to see the real game that's being played, not just the simple version you see on your screen. This really shows the two different mindsets perfectly. The plastic bat approach, over on the left, is all reactive. You're just chasing prices after they've already moved. But the professional approach, on the right, that's proactive. It's about looking at the market structure to figure out why a price is likely to move, before it ever does.
Okay, so how do you actually make that jump from being reactive to proactive? Well, it all starts with learning to look past the price chart itself and starting to see the invisible forces that are actually pushing the market around. This is the core idea. Just watching price candles go up and down is like watching the scoreboard of a game without ever seeing the players on the field. Sure, you see the result, but you have no idea why it happened or what's likely to happen next.
So the first pro tool is something called Orderflow. Think of it like a thermal vision camera for the market. While the price chart just shows you where the ball landed, Orderflow shows you the intensity of every single move along the way. It literally reveals who's in control, the big institutions or the retail crowd, by showing you exactly where the big money is being thrown around. And the second tool is Market Profile. Now, if Orderflow is the thermal camera, Market Profile is the blueprint of the entire building. It takes all that trading data and organizes it over time to show you the market's structure, the zones where the market has accepted a price, and, just as importantly, the zones it has rejected. This is how you start to understand the game plan, not just the individual plays. And when you combine these tools, the source says that a really fundamental shift starts to happen. You stop being a follower, chasing every little price jump, and you start to become a leader. You're not guessing anymore. You're anticipating what the market might do based on its structure and the intent you're seeing. And you can really see the shift in what people say.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. Welcome to this Monday 5 p.m. session. And before we start, I would want all of us to have a look at this must-read section and in the website of wetrender.com, which has been updated and which has all the important tools which you need to know while you're using Wetrender charts. And it has an explanation. It has the basis, both concept-wise as well as how we need to use them in detail. So make sure you go through this, and this has got everything in it: NTM VolX, microbalance, the gamma exposure, spectrum, Mflow, whatever tools we are having. We do keep covering them in our sessions, but we have also made it uh, in text which you can go through. So this is in the must read section, and it has been ordered up again during the last weekend. So make sure, if you want to read up about any of the tools, this is the place to go. And apart from this, we do have our YouTube channel where we put up all the videos which we keep covering on the Monday and Thursday 5 p.m. sessions. So that as well is a good playlist to have. So coming back to today's session, what are we going to look at? The base of Wetrender and VLD is understanding market structure. And how do we do that? We do that by looking at the market profile. So market profile helps us to identify what the structure is doing, and that is our base. So unless the structure is sound, unless the base is strong, you will not be able to build upon it. So the tools which we are adding in the chart section, in the order flow, in the options, are basically meant to be more in sync with the structure. So the tools, when they're in sync with the structure, is when you get the most profitable trades and the best setups, good quality setups. So we should not forget the base, and that is what we are focusing on today. And the base is not just the daily market profile. We have mentioned many times in our webinars that how we follow the top to bottom approach. So we start with the monthly, and then we do the daily, and then finally we start with the monthly, then we do the weekly, and finally the daily. So going to the forum section, we make it a point to update this weekly report, which is done on the basis of spot charts. The weekly and the monthly are done on spot, and the daily is done on mainly on futures, because futures is where the volumes is. But to know the bigger time frame bias, it is important we are aware about the weekly and the monthly time frame also. So what did we do? Let's start with the Nifty spot and see. Let's have a quick look at what we did last week and how we needed to be prepared for the week, for the current week, which is started from today. So last week we opened just above this weekly value area low. This is the weekly profile of the week prior to last week, and this is last week's profile. And to my right, I have the daily chart of previous week's profile. So what are we trying to do? We are trying to see how we can evaluate, as per the weekly time frame, what is happening on the daily. So on Monday, what did we do? We left an initiative selling tail above the previous week's value. So this is showing us rejection. So market profile is showing us rejection on the first day of the week. So what does that mean? That tells us that sellers are in control. There is no demand above this weekly value area high. And you can see this is a well balanced weekly value. So we keep speaking about this 80% rule. And once you get the signal in the initial balance, you know that you are in for a test of this weekly value area low, which is around the 25,940 mark. And that is what we did. We probe lower. In fact, the first day of the week itself was a trend day down, and then that imbalance continued on the second day also. So this is how you figure out what the higher time frame is doing. So on Monday at open, it was a very clear signal of what the auction wants, and it went on to hit the objectives. We went on to test this zone of singles from this weekly profile, 10th to 11th, 10th to 14th November, from where the auction actually started a good up move. So this was the weekly IBH. We got a weekly FA at that level, and we had this zone of singles. So this got tested. Previously we had a weekly FA at 25854, which was showing us support multiple weeks. This, you can see the week prior to the 2 weeks back, the low made was right there, which held. So that was holding up, but then that gave way in the last week, and we went on to test this zone of singles. And what we did was we formed poor lows. This was showing us exhaustion. And after this happened, we again made a retracement back to 26047. So the weekly value was overlapping to lower. And what did we have? We had an initiative selling tail at the top. So seller was there and value was lower. So we would have been bullish only about this weekly value area high, and this POC would be one good support. So what have we done today? I'll take you to the chart of today, and we'll see what we have done. Before that, let's have a quick look at what the hypos were. So 26047 was our first bullish hypo, but today we opened lower. We went on to almost track this VPOC. And there's a very interesting part. I'll take you to the Nifty spot chart, and where we had formed a nice 3-day balance last week. That was Tuesday, Wednesday, and Thursday. And from there on Friday, we got a move higher. So the value area high of that 3-day composite was exactly where we took support today. So 25910 is the tail of today, but the buying tail of today in spot, and 25909 was that value area high. I'll open up the chart and we will see that over here in a bit. But that is how you need to understand market profile, and it is very beautiful in explaining what structure wise auction is doing, and that will give you a big head start into the kind of trades you need to be looking for with the help of order flow and the other tools. So these were the hypos for today, and if you want to open up the weekly chart, we have the link shared in the report. You have this click here to view the market profile chart weekly report. So you only need to click this. Otherwise also there's a very easy way. You go to the VTrender chart section, select the instrument which you want. Because we are looking at spot, I'll go with the spot TPO, and you have the time frames at the bottom left. So I'll go with the calendar week. Because this is spot, we go with the calendar week. In Nifty futures, we go with the weekly series. I'll come to that also in a bit when we talk about futures. But in spot, we are going for the calendar week. So what we were seeing in the report is this B-shape kind of a profile with the initiative selling tail and overlapping to lower value. So this was our support, and this POC is our support. So what we did today and what we can do is the best way to see in a single frame what is happening on multiple time frames is activate the 2-window mode. So we have the weekly profile on our left. I'm not adding up today's profile because we will have that on the right. So what I'm doing is I've activated the 2-window mode using this option on the right hand side, and on the left I'm having the weekly profile, and on the right I will have the daily. So you can so easily see what we have done today with regard to the weekly time frame. And what I was talking to you about, I'll just increase this TPO size by 1 so that this is the 3-day balance which I was talking about. This. And why is it a 3-day balance? Because you can see value is overlapping on these 3 days. So what we can do, we can make a composite of this 3-day, which we have done, and we have covered this in our hypos which we post on a daily basis. So you can see this is a well balanced value area, and the value area high of this is at 25910, and that is where this buying tail of today is. So what did the spot tell us? That is why it is the market profile so beautifully explains us what the structure is doing. So this is the latest information which I am showing you. Today's chart, we opened lower, we continued to probe lower, we are looking for more downside. But what did the spot do? Spot did not sustain below this value area high. if it would have sustained, what was our objective? It would have been the 80% rule with this POC of 25884 being our first target. But because we got a small tail, the size is very small, but it is a very important one. Why? Because this is showing rejection into the entry of this 3-day value. And hence, what did the auction do? Because this failed, it had no other option but to get back into previous value, and we did the 80% rule in this Friday's well balanced zone. So this was a very important cue which the market profile chart showed us. Although we were below value at the open and we were looking for more downside, the entry into the lower value got rejected. Hence we got this probe higher. So what we have done on the daily time frame is form a 2-day balance now. You can see how both of these profiles are having overlapping, almost similar value, and the POC is also at the same level. So on the weekly time frame, what did we do? If I just pull up today's profile and compare it with the weekly. So what did we do? We opened higher around this HVN and we got back into this weekly value, which was 25950. And we went on to make a low of 25904, I think today's low in spot was. So we were not able to tag this POC, which otherwise should have been an objective. Why? Because of the 3-day composite which we had in spot. We stalled right at the value area high of that composite, and that is the reason we have come back. So what we have done value wise, we have formed higher value compared to the previous week. Where the previous week value area high was is where we have the value area low of today. So we are forming higher value today, and it's a P-shaped profile which denotes short covering. So the seller have not done a good job. That is why they were forced to come out, is what the profile is telling us. So what do we need to look for tomorrow? This POC would be the important reference. If we get initiative buying above this POC, that will tell us that we are looking for a test of this selling tail on the weekly time frame. On the other hand, if we are not able to sustain above this, then we'll continue to fill up this zone. And you can see in the weekly report how clearly, and this weekly report was mentioned, was published yesterday. And you can see what was the reference given. The weekly profile from being a double distribution one to the downside closed as a composite B-shaped profile with overlapping to lower value. And the close was well above the value area high. It was a bullish close, but what we had was a selling tail also. So it could continue to fill up the zone between 25909 and 26130. This was mentioned yesterday, and this was on the basis of what the market profile was showing us. And you can see how today the low was exactly at this lower reference of 25909. So this is why it is so important to understand the market profile levels and to know what the weekly is doing and what then the daily is doing as per the weekly. So it was not a surprise that we have stalled right at this 25909 and the downside. Yes, the high was at 26045, which was the value area high of Friday. So we need to see some buying confirmation over there. And if we do get that, then we are looking for a test of this 26130. Again, that 26130 would be one important reference in spot for this current week and especially for tomorrow's settlement. So this is how we were placed in Nifty for this week. And as I showed you, you can have this 2-window mode, and in one screen, you can see what is happening on multiple time frames. So coming now to the Bank Nifty spot before we move on to the futures and see what is in store for tomorrow. Bank Nifty also, what it has done, it started with an initiative selling tail, went on to do the 80% rule, and you can see how it repaired these poor lows, but again formed a new set of poor lows, taking support right at this buying tail. So Bank Nifty also is formed a narrow range Gaussian curve. You can see the range is narrowed, the value is narrowed, and it has been in a almost all 5 days of the week. you saw overlapping value. That is why we've got a nice Gaussian curve and with a prominent POC at 59,200 to 10 levels, I think. So same thing in Bank Nifty. What we are looking for from the RBI day, we got that mandatory 1,000 point. RBI most of the times gives us a 1,000 point move in Bank Nifty. And from the highs of RBI, we have got that 1,000 point drop. And there we took support and we have come back to 59545. So I would want to make a very interesting point over here. And just like what we saw on the weekly time frame, if I take you to the monthly time frame of Bank Nifty and you see today's auction, today's auction is right in between the value area high and the value area low of the month. So again, I'll open up the Bank Nifty monthly chart and it's the same exercise. You go to Bank Nifty spot TPO because we are looking at the higher time frame. You go to the calendar month and you can see how, if I don't keep today's profile and I'll have the 2 window mode open, and this is on the left is your monthly profile, which is again a B shape. A B shape profile has a nice well balanced value. We have seen that in Nifty in the previous week's profile also. So what is Bank Nifty doing? It is forming a nice balanced value for the month. And let us see what the value area high for the month was. 59547 is the value area high and 58996 is the value area low. And if I take you to today's auction, so if you just see today's auction, you can see the high of today was right where the value area high is. And the low of today is right where the value area low is. So what is the Bank Nifty doing? It is continuing to form a balance on the highest time frame, which is the monthly time frame. And that is the reason on the weekly time frame we are looking at overlapping value in it. You can see how for the last 3 weeks Bank Nifty is showing us overlapping value. In fact, even this week value was lower, but these 3 weeks are completely overlapping value. So this is what market profile shows us. And when you are seeing the bigger time frame forming a balance, you know what are the ranges to trade. So that is the reason today when we hit these highs, we did not get 1 point above that value area high of the month, which was 59547. In fact, that hypo was mentioned in our spot hypos for today in Bank Nifty. And you can see how the downside got support at this 59111 and how the upside value area high of December is where we stalled. So why were we able to make out these references? This is only because on the higher time frame we could see the profile is a well balanced one. So unless you get initiative buying activity at this value area high, you will not get a test of this selling tail. And same thing, unless you get initiative selling activity at this value area low, you're not going to get a move lower. So as of now, this is the range to trade with in Bank Nifty spot. And if you are aware about this, you will not be overtly bullish when we were making this poor highs today. Otherwise, what would have happened? It is poor high, they will get repaired. You can get a spike, so let us move higher. Just because we knew on the monthly time frame this value area high is an important reference, we were able to understand that you need to book profit and wait for some initiative activity by the buyers for more upside. And same thing on the downside, you will not go short in spite of the gap down at this level because this is a known support and we have it covered in our hypo. So all these hypos are based on market profile because in spot we don't have volumes. We look at market profile, we look at what the TPO is telling us and what the value is doing. So they are very important, and this 2 window mode is a very important way to view in a single screen how the auction is getting in sync on multiple time frames. So when you know about this monthly reference, you will not be bearish over here, and you will not be ultra bullish over here. So you know this is the range for the month so far, and you will be happy to trade inside this range. So what do we do? If you get some buy side confirmation at this zone, you will go long. You will book profit at your target one based on the stop loss when you enter. And at here you will become very skeptical about holding longs till the time you get a extension handle or a buy side tail at the open on one of the days in the coming sessions. So this is how you can add up the multiple time frame and see what it is doing, and accordingly form a good bias which will help you to uh, work out the markets. So another point I would want to show you is, if you go to the daily chart of the Bank Nifty spot, you can see I've already formed this 9-day balance. And why was this? Because we are having overlapping value since the 9 days. And why is it that we are having it here? You can see how on this date, 26th of November, we had this huge move in the initial balance. You don't get to see this often. You had an elongated tail, but then after that, the body of the profile was a very small balance. So what we did in the last 10 sessions of December is form value in this low volume zone. So that is what the auction is doing. That is what Bank Nifty is doing. It is filling up this zone because it had moved away in a hurry. So once it fills up this zone, then we can expect it to give us a good move again, a directional move again. What will be the direction? That will be based on how it moves away from this 10-day composite value. So this is about the spot. This is about the higher time frame. And now let us get going with the futures and see what the Nifty futures is having in hold and what do we have for tomorrow's expiry. So let me open up the Nifty profile chart and we'll go with the series wise. And same thing here. If I take you quickly to a weekly series chart, because this is futures, it is important to know the difference between a calendar week and a series week. So because in futures and options, the inventory is built series by series. So every Tuesday when the settlement gets over, Wednesday onwards, the option inventory is being built. Yes, the futures is from Wednesday to the last Tuesday of the month, but in options, there is a cycle, settlement cycle. So it is very important for us to view the futures also as per that, if you want to look at the weekly chart. And that is why we have this option of W_S. So if I click on this, you can so easily figure out what profile we had last week, and last week's high stalled right below this VPOC. And then the current week, of which today was the 4th day, you can see how the current week was forming an irregular kind of a profile. And you can see there was this zone. And today's profile is like a zigzag puzzle, which is filling up this zone. So this I can make out only because I am seeing the bigger time frame and I know the auction has still got some work to do in this zone. And that is what it has done today. And that is the reason there will be days where the market does nothing, or the moves are not in sync, or you're not able to understand why the market, in spite of opening lower, is not dropped. So this is the reason. What it did, it took support at the current weekly VWAP, and then it has filled up this zone between this HVN and this the lower HVN and the upper HVN. So if you combine this, you get a nice balanced, more balanced weekly profile. And tomorrow being the last day of this current settlement, you will need to see how this shapes up tomorrow. And for that, we will need to have this weekly chart in mind. I'll just combine today's chart so that we are actually able to get the current week's value. So this is where we have closed. And you can see how the POC and the VWAP are at this 26011 level, which is where we took support today in the morning. And this is the upper reference where you have a HVN at 26100. So these are the references in futures. And if you want to monitor this the weekly with the daily. Tomorrow you will need to see the daily sustain above this value area high, the developing value area high, and definitely above this HVN. And if we are able to do that, we are looking for more upside for the settlement. If not, what are we doing? We already were stuck in the zone between these two HVNs, 26,000 on the downside, 26,100 on the upside. So this zone would be the reference. If we are able to break this with some supply, then we are looking for more downside. Else we are going to remain in this between the two HVNs. So on the daily, we will have to figure out if we are able to stay above this and take this daily VPOC out from Friday. So this is how you can mix and match the market profile charts of multiple time frames, both in futures as well in spot, and then have the levels marked and see what the order flow is doing at those levels. So coming to tomorrow's settlement, let's have a quick look at the gamma exposure chart first, and then we'll move on to the gamma density. And I have the 2 window gamma exposure, and why I have put this is we need to understand what happened. Just a second, guys. Hello. Sorry, guys. Am I audible? Yeah. Yeah. Coming back to this gamma exposure chart, the reason I have this open is we need to see how we had closed on Friday. It was short gamma at this 26,000 level. And this was telling us that because we closed well above the 26,000 spot, that was being held as a support. But today's lower open changed this view. And what we saw was this short gamma in the A period itself turned to long gamma. So what was this telling us? This was telling us that because the spot is now below 26,000, there was big writing in the 26,000 call and 26,000 put was being bought. So that is the reason this became long gamma. So, but as we move forward, we saw the down move getting stalled. And that is when this peak, you can see this was the max, I think at 10:15, which was at the end of IB. But after that, things began to change. You can see the peak reducing. It has come down lower and then finally that getting into short gamma again. So what does this tell and how does it help us to trade? So you know that the lower open got the call writers interested, and 26,000 was the strike price where they got into and they started selling it. But as we saw the structure holding that value area high of the 3-day composite, the 25909, so it is very important that you understand that once that took support, the 26,000 call writers hit a block that may be the low or we would have got, and the 26,000 put may have hit a high. After that, once we saw change in the auction, once the B period left a tail and we started to get back higher, it was very easy to understand that the call writers would have got hit. And how do we make that out? We have this wonderful combination of the volume X chart, which I have on the left of my screen, and I have the line chart of the 26,000 call. So you can see how the volume X at the open showed us that the purple is above the call, above the blue, and that was telling us you need to look for puts. But this crossover, when it happened, you know now here that the call side is the demand is more. So here at the 10 a.m. slot, just when we completed that initial balance, you can see how you're getting a green bar at VWAP in that option, the 26,000 call. And you can see how the Mflow is showing us greens at the open. Why is this green? Because this is fresh writing which is got into this because of the gap down. And you can see after that how this became more red, because it forced all these writers to get out. And that is the reason 26,000, which was short gamma at close on Friday, which became long gamma in the opening 20 30 minutes, was again forced to get into short gamma. So that is how you need to, that is why this gamma exposure is so important. And it helps us to understand what the inventory, how the inventory is placed, and if the inventory has to be adjusted, which are the strikes which we need to follow. So after this, let's have a look at how the gamma density and the exposure are based for tomorrow, and what are the levels which we need to look out for. So we have the gamma density on the left and the gamma exposure closing reference on the right. So here you can see how you have a single peak at 26,000, and we have short gamma 26,000, we have short gamma 25,900, and we have long gamma 26,100. So what is this telling us? So 26,000 and 25,900 is short gamma, 26,100 is long gamma. So 26,100 long PE and short 2x and 3x of 25,900 PE is one spread which the big money is playing out. And the second spread is this 26,000 straddle. So this is what the option inventory is showing us. So if it needs to get adjusted, what are the levels which needs to hold? So you have the gamma density where you have a peak at 26,000, but you have a similar peak at 26050 also. And the one sigma on the downside is 25850, which would be the support for even these straddles and these strangles, which the option players are holding. And on the upper side, 26,100 would be the reference. So the immediate range for tomorrow settlement would be 25850 to 26100. And if we get a 3 sigma move, what would be the objectives? On the downside, 25650 is the level to watch, and on the upper end it will be 26250, which will be on watch. So this is what the settlement inventory as of now is showing us. 26,000 is gamma 0, and we have the peak over there, it is short gamma also. So we will need to get back at the open tomorrow and monitor if this remains short gamma, and if this peak which is showing at around the 85,000 level continues to go higher. If it is going higher, there's a very good chance that 26,000 could be pinned for tomorrow's settlement. If not, we will end. What will happen even if these peaks will get merged into this 26,000. If that does not happen, we will have to monitor if any of this gets short gamma or if this gets long gamma, and accordingly look to trade the strikes which could get hit or where the option inventory may be forced to change. Just like what happened today at the open, post open, the writers of 26,000 call had to get out because they got into trouble. They had to adjust. So they would have done some adjustment, but while they do the adjustment, we have an opportunity which is showing up in that particular strike, and we can make use of it using the volume X and the order flow of that very strike. But to understand when that opportunity comes, which are the levels, it is very important to have this gamma density and gamma exposure open and followed tomorrow in live markets. So that is it for today from my side, guys. That is how we are placed for tomorrow's settlement. The range as of now is 25,850 to 26,100, the immediate range, and the max range is 25650 to 26250. Gamma 0 is at 26,000, 26,000 and 25,900 are short gamma, 26,100 is long gamma. So we will need to again come back at 9:15 tomorrow and see how these peaks shape up, and if they continue to give a single peak in the gamma density. and that is how we will be able to identify how the settlement can phase out and accordingly take trades in that direction. So that is it for today from my side, guys. Hope this session was helpful, and you can feel free to post your queries for any of the topics which we cover, and you can contact me on X. My DM ID on DM, my Twitter ID is open at Uttam Goel, and you can also mail us at support@vtrender.com. So I would want to take back your attention to the must read section of our blog. Make sure you are in sync with all the tools which we have so that you can make use of them as per what the structure is showing us. And those will be some of the best trades which we can take up. So thank you guys for joining in, and I'll have a great evening, and let's hope we have a great weekly settlement tomorrow.